What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful, both on Instagram through DMs and on the YouTube channel through the comments. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out their brokerage app. Those 12 free stocks will be worth up to $30,600. There's a link down in the description box of the video. Go click on that Webull link. Open up that new Webull account today. Go get that free stock. Go get that free money. It's been a pretty busy week, both in our economy and in the stock market. And let's start with the economy. So on Tuesday, May 13th, the CPI inflation report came out. And I must say, guys, in my opinion, it was good news. Year over year inflation is 4%. Compared to April year-over-year inflation, which was 4.9%. So a big difference. Keep in mind, inflation hit its all-time high in June of 2022 at 9.1%. So we've come quite a long ways. Now they call that headline inflation. Core inflation, on the other hand, came in at 5.3% year over year. And a lot of folks are saying that's not a good sign. Now, I'm not going to debate whether headline inflation is what we should be focused on or core inflation is what we should be focused on. I just look at it as inflation as a whole. And I like the progress that we've made over the last year and a half or so, from 9% headline all the way down to 4%. Now, expectations from the market was that inflation would come in at 4.1% year over year in May. Beat expectations at 4%. So that's a win for me. On core inflation, on the other hand, the market thought it would come in at around 5.2% year over year for May, and it actually came in at 5.3%. So not really meeting expectations. And most people look at core inflation as the real inflation we should be paying attention to. And I think the Federal Reserve looks at core inflation as the main inflation that they pay attention to. And it's been a quite bit sticky. It's not coming down as fast as headline inflation. So that's where we're at, in my opinion, with the economy as it relates to inflation. I think we're doing great, making great progress. There are others out there don't believe we're making great progress. The second part of the economy I want to talk about deals with actually the Federal Reserve. They had their May meeting this week as well, 13th and the 14th. And the Federal Reserve decided not to increase short-term interest rates. And the reason they decided not to increase, at least according to the Fed Chair, Jerome Powell, is because they wanted to give the economy a break. They wanted to take a wait and see look at how the economy would react to not having interest rates increased. They feel like they've made some progress, but they do not believe they've made enough progress. And they were pretty hawkish on their forward thinking. And what I mean by that is Fed Chair Jerome Powell said, we're going to raise interest rates a couple more times this year in 2023. See, the market thought they would put a pause on interest rate hikes in their May meeting. Pretty much everybody thought that. What everybody didn't think was Fed Chair would come out, Fed Chair Jerome Powell would come out and say they're going to raise interest rates a couple more times this year. That was not what the market wanted to hear. But the reason he said that is because core inflation, like I talked about earlier, is not coming down as fast as they'd like it to. And that's the one that they really look at when it comes to inflation in our economy, right? They look at core inflation. And in order to get core inflation down to 2%, they believe they need to keep increasing short-term interest rates. And they're prepared to do that a couple more times in 2023 if necessary. So the market was a little bit thrown aback by that. And on Tuesday, when the CPI numbers came out, the market rallied, the stock market. And then on Wednesday, when Fed Chair Jerome Powell made his comments after, they didn't increase short-term interest rates for the first time since, January 2022, the market sort of sold off a little bit. I mean, it wasn't a major sell-off, but you could feel the disappointment in the direction that the Fed chair and the Federal Reserve is heading. And the market really didn't like that. So what does that mean for the stock market going forward? Because I know I've had some people ask me, well, if the economy is doing so bad, why is the stock market up? Why is the S&P 500 up? Why is the Dow Jones up? Why is the NASDAQ up? And again, guys, I'm no expert here. I'm no economist or anything like that, but I'm going to give you my opinion. I've always told you guys the stock market is about making money, man. And at some point, the 1%, the people who actually control the stock market, they control our financial markets. At some point, these people got to make money, right? They're not going to go 2022 and 2023 without making any money. So at some point, you take any good news and you put it into the propaganda machine. And of course, you guys know the propaganda machine is the media, right? You're going to take any good news, you throw it into the propaganda machine, and then all of a sudden, activity starts again, right? Whether it be institutional investors, whether it be hedge funds, whether it be retail investors, you start getting this activity moving again. Also, you got to understand with this AI boom that has resurrected itself, that's also fueling a lot of growth right now in companies, especially in the technology sector, right? You can see what's happening with technology. You can start to see what's happening with other industries as well, right? So at some point, the 1%, they want to make money, regardless of what the Federal Reserve is doing. You hear what I'm saying? Even though the Federal Reserve has an indirect impact on the stock market, they really do, because if they keep raising these interest rates like they're raising them, then the stock market will contract, right? It will stop growing. But for right now, with headline inflation at 4%, all the way from 9%, that's good news, guys. That's good news. No matter what core inflation is doing, even though I know that's the one that the Fed looks at, you still got good news. And anytime you can take good news and throw it into the propaganda machine, people are going to get happy about that. People are going to start wanting to invest. People are going to start wanting to take their money and multiply it. And that's, in my opinion, that's what's happening. I think you got companies like Tesla. Now, 6 months ago, people thought Tesla was going to zero. Now look at Tesla. 6 months later, look at it. It's at $260 a share, up from $104 a share like 6 months ago. Not even 6 months ago. See, this is what I'm trying to tell you, how, our financial system is manipulated by these people who control it. And as retail investors, you and I, our job is to figure out how this game is played. And I figured it out over 25 years ago how it was played. And I just know the rules, so I'm able to get in and participate and play the game and be successful at it. All I'm telling you is you got to determine what type of financial goals you have for yourself. And if you believe the stock market can help you reach those financial goals, then invest. If you believe real estate can help you reach your financial goals, then invest. If you believe starting a business can help you reach your financial goals, then invest in that business. But what you can't do is sit on the sideline and be scared the whole time because you think you're going to lose all your money. Now, don't get me wrong. If you want to sit on the sideline, stay there. But I'm telling you right now, people are building wealth. And you have the opportunity to do that too. Now, the way I build wealth is through investing in assets that at some point will create passive income for me. And those assets include paper assets through the stock market. And all I invest in, guys, is ETFs that track the S&P 500 index and track the total stock market and track individual sectors. That's what I do. I'm not out here trying to pick all these individual stocks and what's going to be up today, what's going to be up tomorrow. I don't do that. I just simply invest in ETFs that track the S&P 500 index, the total stock market, and sectors. Sectors like the technology sector. That's what I put my money in. ETFs that track those sectors, indexes, right? When I invest in real estate, it's pretty simple. I buy residential real estate, 1 to 4 family dwellings in good neighborhoods that I would live in. I put my money, 20% of my money into that deal. I go to the bank, borrow 80%. I collect rent. The rent that I collect pays all the expenses for the property and puts a little bit of money in my pocket. But where the magic happens is, since I bought that property in a good neighborhood, when I wait 5 years or 10 years or 15 years, that property increases in value over that 5, 10, or 15-year period. And that's where I build my net worth. And I just duplicate that process. I don't try to get fancy. I don't try to do Airbnb. I don't try to do all this other stuff you see on YouTube. I don't try to do any of that. I just simply go buy a single family home, a duplex, a threeplex, a fourplex. I put tenants in it and I wait. The key to building wealth with real estate is location. That's my opinion. You have to go out and do your homework and figure out what your opinion is. My opinion is this, but my opinion is proven to me because I've done it for 25 years and I've built wealth that way. And then the third way is businesses. The best time to start a business is when no one else wants to start one, guys. The worst time to start a business is when everybody else wants to start one. Period. If you believe there's a problem out there you can solve for people, start you a business. Take your solution and show people you can solve their problems. You'll make a bunch of money. But you can't just go start a business and you haven't figured out what problem you're going to solve. I like making t-shirts, so I'm just going to start making t-shirts. Oh, I like selling stuff online, so I'm going to just sell stuff online. Oh, I like a cooking show, so I'm going to start me a cooking YouTube channel. I mean, you got to figure out what people need solving. And then you come up with a solution to solve that problem. For me, when I started my business, RF Financial Consulting, I said, well, what problem out there do people have that I can help them solve with my skill set? Oh, financial literacy. There's a lot of people out there that lack financial literacy. Guess what? I got a skill set of 25 years of building wealth. Maybe I can help some of these folks. See, I identified the problem and then I built a solution through this YouTube channel, through my one-on-one sessions to help people solve that problem. Get yourself in the game, guys. Stop sitting on the sideline. Get in the game. If you want them 12 free stocks from Webull, you know what you got to do. You got to click on that link down in the description box, guys. Again, put yourself in the game. Click on the link, get in the game. Go get that free stock, go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. I'm going to catch you on the next video. Thanks. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.